People put their money into stocks, bonds, and real estate, among other things. These things are liabilities because they could be lost or broken. There are, however, other kinds of investments that aren't considered liabilities. These investments are called assets because they give a return on the money that was put into them. This video will discuss the different kinds of assets and how they can help you make more money. From bonds to real estate, we'll talk in detail about each and give you tips on investing. This video will help you make better financial decisions and invest in assets instead of liabilities. Put your money to work for you somehow. Each says this remark, and every investment guru we see on our televisions has already heard it. However, they rarely continue to teach you how to complete this seemingly straightforward task. When you invest in assets rather than obligations, your money goes to work for you. To put it in the simplest terms possible, before putting any money into an investment, it is critical to take a step back and assess the opportunities presented by that venture. This should be done before making any financial commitment. What are assets? One way to think about assets is as something with economic worth and potential future benefits. There is a widespread misunderstanding that wealthy people can purchase luxury items based only on their wealth. On the other hand, these pleasures frequently originate from the profits generated by the assets. To buy a flashy new automobile, you should invest in some property before making that purchase. This will help you build equity faster. A sufficient amount of cash flow would be produced as a result of the investment in the real estate, which could then be used to finance the vehicle. Creating additional cash flow through planned and controlled investment helps stabilize your financial situation and enables you to spend without significantly impacting your safety net. Assets include stocks and bonds, real estate that may be rented out, and other things expected to increase in value over time. However, the appreciation should be lower than the market inflation and the expense of maintaining the item itself. There are some classic instances of assets that have the potential to be financially beneficial to their owners. Bonds. Bonds are simply loans you make to a company, and the company is responsible for repaying the principal amount plus interest. Bonds, just like stocks, have the potential to fluctuate in value and are therefore a method for creating cash flow. There is a wide variety of bonds available, including those with a fixed interest rate, those tied to inflation, those with a fluctuating interest rate, those with no interest, and many others. Time is considered one of the most valuable and essential resources an individual may amass. It is something that you can only get a little of at any given point in time. Therefore, making effective use of your time is the most valuable asset you can possess because it enables you to invest that time in furthering your education and then sell the talents you have acquired in the future to produce cash flow. Stocks. Shares of ownership in a company sold to individual investors are known as stocks. These aspects of the business bring in cash in two different ways. The first way is through the distribution of dividends based on the earnings that the company has made. The second way is through the value of the stock once it has been resold. That is to say, whenever there is an increase in the firm's value, there is a corresponding increase in the stock value. Investing in stocks might be profitable if you want to purchase property or other assets. Cash is something that belongs in the assets column. Even when you can acquire cash, you still have the option of saving it up rather than using the money to pay off debts or other obligations. Cash is the asset with the highest degree of market liquidity. You can use this value to cover costs whenever the situation calls for it. But because it's so simple to get to, you need to take advantage of the opportunity to gain money that comes with investments. Even so, it's a good idea to have a solid emergency fund with enough cash to cover the costs of living for 3 to 6 months in the event of an emergency. Real estate. Real estate has consistently been one of the most profitable assets throughout history. This is primarily down to its exceptional capacity to bring in cash flow in the form of rent and its consistent value growth. In addition to purchasing individual pieces of real estate, you might also put your money into real estate investment trusts, often known as REITs. These are companies that acquire, sell, or manage income-generating properties. The process of purchasing and selling shares of real estate investment trusts, REITs, on major exchanges is virtually identical to that of trading equities. There are a lot of different real estate investment groups with characteristics that are very similar to those of tiny mutual funds. They make it easier for you to own rental properties, freeing you from the responsibilities of acting as a landlord. Tips on how to buy assets. When buying assets, there are many things to think about, like the market, the company's finances, and long-term prospects. Talk to a financial advisor to figure out what you should do when you're ready to buy. Also, make sure you have a good plan for keeping the things you bought safely. This could mean adding them to your business, putting money into a secured loan, or making a trust. How to protect your assets. Buying assets is essential for several reasons. First, it allows you to save money when things get complicated. Second, it gives you financial stability. Third, it can give you growth opportunities in the future. Doing your homework is the most important thing to remember when investing. Make sure you know what risks are involved and that the return on your investment is worth it. Diversifying your portfolio is one way to protect your assets. This means buying various assets like stocks, bonds, and real estate. Doing this will lower the chance that one investment will fail and increase your chances of making a profit. Creating a living will is another way to protect your assets. This will say how you want to be treated medically if you can't make decisions for yourself. It can also include instructions for what should happen to your property after you die. Having a will in place can make your death less stressful and worry-inducing. What are liabilities? Everything that causes you to incur a financial loss might be a liability. These include expensive expenditures such as televisions, automobiles, and expensive haircuts, in addition to a wide variety of other items. You won't be able to prevent some of these things. But to have a stable financial status, your assets must be more than your liabilities. This will ensure that you are in good shape financially. Some obligations can't be escaped, and most people put money into them anyway. One of these types of investments is a motor vehicle. In spite of the fact that there are a number of ways to acquire a car suitable for the purpose, most people lean toward buying a vehicle. The vehicle will always be a liability because its worth will almost certainly decrease with time, and it will cost a significant amount of money to operate and maintain it. This is the case regardless of how you look at it. The home in which you currently reside represents the second of these certain financial obligations. Occupying a piece of real estate that you have purchased means you are not receiving any income from it and are therefore considered a liability. Assets that can be turned into liabilities. In this technology-driven world that we currently reside in, it is easier than it has ever been to convert liabilities into assets. Property owners all around the world are turning to short-term online rentals of their extra rooms, apartments, and condominiums as a means of bringing in additional income from the rental of their properties. You can even rent a spare couch to tourists looking for somewhere to stay for a short period. Instantaneously, something you had been thinking of as a liability is now contributing to the growth of your wealth. Ride sharing allows you to transform your vehicle into a source of revenue, and ride-hailing services make this possible. The passage of time is one of the most typical ways that liability can be converted into an asset. Every minute of idle time constitutes a potential loss in every sense of the word. A significant number of people who have full-time occupations look for additional sources of income, such as part-time work or a small business, in addition to their primary employment to maximize the amount of money they can make in the same amount of time. Why it's a good idea to buy assets. It should come as no surprise that it is more beneficial to put money into assets than to put money into liabilities. The most important of these advantages is its long-term financial stability. Even if short-term gains are essential, you should also prepare for a day when you will no longer have a steady income in the form of a wage. Those people who can maintain their high standard of living after retirement are frequently the ones who have made strategic investments to generate a passive income for the rest of their lives. The value of an asset often rises with time, making it a potentially lucrative investment choice. On the other hand, investing in liabilities may accomplish specific goals in the here and now, but it frequently results in monetary exhaustion in the long run. Therefore, you should be sure you are purchasing assets, not liabilities. So that's all for today's video. If you like this video, click the like and the bell buttons. We'll have another video for you soon. Take care until then.